I don't own gold because I think it might go up to $3,000. I own gold in case it goes to $10,000. And in that circumstance, I'll be very happy to have a financial asset that I can be long for which there is no short, there is no counterparty risk. That's what I mean by insurance. In a world like today, and we're here at an investment conference, we're thinking mostly investments, and I don't mean to beat up on Trump, but things that he's working on could go wrong. Negotiations in Europe, who knows how well he really knows Putin? What if things don't go the way he expects?
In today's volatile economic landscape, gold continues to capture attention as a haven and a strategic investment. Recent market movements underscore this interest, with gold prices reaching a fresh weekly high of $2,773 to $2,774 during European trading hours on Thursday. This upward momentum has sparked discussions about the metal's future trajectory, with some analysts projecting prices could reach $3,000 per ounce by 2025. Veteran mining analyst Lobo Tiggre offers a compelling investment strategy for precious metals, emphasizing the importance of embracing market volatility. He follows Doug Casey's advice to make volatility your friend. Tiggre explains his gold investment approach. I don't own gold because I think it might go up to $3,000. I own gold in case it goes to $10,000. While the $10,000 target seems ambitious, analysts find a $5,000 projection by 2030 more realistic, considering current inflation trends. Tiggre emphasizes this point by positioning gold not merely as a speculative investment, but as a fundamental hard asset and form of savings, particularly crucial during turbulent economic periods. This viewpoint aligns with legendary investor Ray Dalio's analysis of gold's role in portfolio management. Dalio emphasizes gold's unique ability to enhance portfolio performance, noting, adding gold to the portfolio raises its expected return without depending on the particular assets held in the portfolio. He likens gold ownership to holding an insurance policy, providing crucial protection during periods of market uncertainty. The historical perspective further strengthens the gold case. Throughout centuries of economic upheaval, gold has consistently demonstrated its ability to preserve wealth and provide stability. This characteristic makes it valuable as a hedge against inflation and currency devaluation. Before we dive deeper into this video, please take a moment to subscribe to our channel, hit the bell icon to ensure you never miss any updates, and share this video with your friends, family, or anyone who might find this information helpful.
I think gold is an absolute essential, but it's not a play, it's not a speculation, it's not even investment. It's a hard asset, it's savings, it's insurance, and I think in volatile times, that's more important than ever. As far as making money goes, my mentor Doug Casey used to say, make volatility your friend. So a couple ways you can do this. The simplest way is just to, if we expect volatility, you look at the things that you want to invest in, the things you have confidence in, and then you wait for these big fluctuations and you buy at that point. Another strategy that we've been using in the newsletter is you can sell puts. So you don't know what's going to happen. It's volatile, it's uncertain. But if something that you absolutely, company that's a grade A, tier 1, you really like this, but it's not on sale, well, maybe this volatility can be your friend. Yeah. So if you sell puts on it and nothing happens, you make the money from selling the puts.
Right.
And if you get put, there's some big shakeup in the market and you get filled at a lower price, well, then you take ownership of something that you wanted anyway. So this is how I'm thinking of 2025. I don't know what's going to happen. Nobody knows what's going to happen. We just know that we're going to see lots of up and down in the markets, and so I'm thinking about ways to take advantage of that volatility.
What's your underlying assumption behind this heightened volatility? Why do we have so much uncertainty after the Trump inauguration? I mean, we already know who won the election. It's Trump. We already know what he wants to do.
Well, but do we? We were told that we're going to be, tariffs across the board on day one. And now we have a memo.
That's right.
Researching tariffs, right? So things aren't even the surprises are starting already. My general approach is just to assume that things are going to fluctuate in big ways, and how do we take advantage of that? But then the other thing is, like with the gold comment, and you've heard Rick Rule say this, I'm sure he's told you on interviews with him. I don't own gold because I think it might go up to $3,000. I own gold in case it goes to $10,000. And in that circumstance, I'll be very happy to have a financial asset that I can be long for which there is no short, there is no counterparty risk. That's what I mean by insurance. In a world like today, and we're here at an investment conference, we're thinking mostly investments, and I don't mean to beat up on Trump, but things that he's working on could go wrong. Negotiations in Europe, who knows how well he really knows Putin? What if things don't go the way he expects? Or what if, he's successful in ending the war in Europe by letting the Russians win? Like you cut off funding to Ukraine, and Putin takes a chunk of it, what does that tell Xi over in China about Taiwan? Right? If the U.S. is going to back away from allies, then that, it seems to me, would encourage other adventurous, powerful forces to sally forth. So this is a world in which I think even the average Joe, who isn't a gold bug, would think about, maybe a little bit of insurance isn't a bad idea.
Yes.
But as far as making money in the markets goes, since I don't know which way the markets are going to go, that's why I'm talking about being prepared with stink bids in case of big fluctuations, things like selling puts. That's how I'm thinking.
Analyst Lobo Tiggre highlights how fiscal dominance has prevented a significant recession in 2024. His assessment points to U.S. budgetary policies, exceptionally high government spending, and persistent inflationary pressures as key factors that have helped avert a more severe economic downturn. The global economic outlook, however, presents a more complex picture. Financial experts note an increased likelihood of a worldwide recession, with probabilities rising from 35% to 45% by the end of 2025. This concern comes despite signs that the U.S. economy is achieving a soft landing, characterized by moderating growth and inflation rates. Tigre's bullish outlook on commodities and monetary metals, driven by his expectations of higher inflation, appears to align with broader economic projections for 2025. While the U.S. economy is expected to maintain modest growth above 2%, reaching the Federal Reserve's 2% inflation target remains gradual. This persistent inflationary environment supports Tigre's perspective on commodity markets. The Federal Reserve's monetary policy stance reflects these ongoing challenges. Analysts project that the Fed is unlikely to reduce its policy rate below the 3.75% to 4% range, indicating a continued focus on managing inflation rather than stimulating growth. Let's get back to the interview.
If you're waiting for the rising tide to lift all ships and all this momentum money to come into gold, like let's say gold goes, as the mainstream guys are saying, Bank of America, still $3,000 gold.
Sure.
Let's say we get $3,000 gold. A year ago we would have said, well, surely that would bring everybody flooding in. How could you have this record high of $3,000 gold? The rising tide will lift all ships. It'll be great. Everybody will pile into this.
Yes.
Well, gold going to $3,000 from where we are now, that's what, a 15% rise? That's nothing compared to what one of these cryptos can do in an hour. But I think there's a substantial risk of momentum chasing money of the sort that rises all ships not coming here. And if it's not going to go to gold, why the heck would it go to the gold stock?
Absolutely.
So the takeaway here is not throw up your hands and give up and buy buy meme coins. I'm saying this is a stock picker's market. The other data we got from 2024 was that the better companies did do well.
Yes.
Like people are pulling out their hair, complaining about the GDX didn't really rise any more than gold. Like, why would you bother with the mining stocks if they're not going to outperform the metal?
Yes.
The metal doesn't have operational risk or technical risk, right? So if the mining stocks aren't going to deliver leverage to the metal, there is no reason to speculate them. What I'm saying though is if you're a stock picker, if you didn't just get the ETF, or buy the index, if you pick the companies that actually delivered in 2024, you did beat the index. And by the way, you beat the S&P 500. So I think this is a stock picker's market. The rising tide might lift dollars, but I wouldn't bet on it. So I want to be not just defensive, I want to make sure that I'm in the best place, whether it's gold or uranium or copper or whatever I'm bullish on. I want to be a stock picker, and I want to make sure that I have the best companies I can possibly put my money into. Yes. I think we see fiscal dominance in spades. I think that means for the economy that what the Fed tries to do with monetary policy is blunted. It's less effective. Arguably, we're seeing that already. I think it's inflationary. The money helicopters, if you think about it, we're running wartime levels of deficit spending, and we have been since the COVID lockdowns. And I think this is why you've been very nice. You haven't put me on the spot about my missed call for 24. But I said we would probably have undeniable recession by the end of last year. I was wrong. You could argue we had recession in manufacturing, we had some rolling recession, but I said undeniable recession by the end of 24. So if we didn't get undeniable recession, we're talking U.S. here, and commodities are quoted in dollars, so that matters. I'm not ignoring the rest of the world.
Right.
I'm just saying for us as commodity speculators, this matters. And if the fiscal dominance prevented anything that anybody would recognize as recession in 24, and Trump wants to keep the spending going, and he wants to, give people no taxes on tips and no taxes if you're a firefighter and no taxes on overtime, all this stuff, right? This is more fiscal dominance we can see ahead. So the takeaways, let's set the economy aside. I'm expecting higher inflation, and that's bullish for commodities writ large. And I think it's particularly bullish for the monetary metals because it starts to look like potentially stagflation again.
As inflationary pressures persist and the Federal Reserve maintains higher interest rates, gold remains a vital asset for wealth preservation. With the U.S. economy expected to experience modest growth and core inflation gradually moving toward the 2% target, the role of gold becomes even more significant. Do you think gold will remain a haven in the current economic environment? Let us know in the comments below. We'd love your thoughts. If you found this video helpful, don't forget to give it a thumbs up. Thank you for watching.